Well, welcome to another episode of Breakaway from the Rat Race. And today I have the pleasure of speaking with Adam Carroll. Adam is an author, a very well-known author. Is also a TEDx speaker. And through the use of the Shred method, Adam Carroll paid off his home in record time, saving over $180,000 in interest in the process. He's sharing his strategy with the world in order to help people free themselves to be themselves. He's also a big proponent of the FIRE movement. We're going to talk about that. And Adam has published 4 books, produced an award-winning documentary on student loan debt. It has a TED Talk with over 5 million views, and he helps people achieve true financial freedom in their lives. More than financial freedom, Adam is all about helping people achieve time freedom, relationship freedom, and service freedom. Adam, welcome to the show.
Eric, thank you for having me. I'm excited to have this conversation with you.
Yeah, that'd be great because I think so let's talk about when you talk about we talk a lot about money, right? I mean, so
Yeah.
I want to have financial freedom, blah blah blah. But in the end, I mean, this is why I like your last line. I mean, it's really about time. Everybody get the same number of minutes
Yes.
every day. It's about relationship and it's about service. So I think these
Yes.
are the things that are truly important. Yes, money is important, but this is not the end goal, and it shouldn't be the end goal.
Yes. I couldn't agree more. Zig Ziglar, I think, was famous for saying that money is not the most important thing, but it ranks right up there with oxygen on the gotta have it scale. So
Yeah.
it is
Yeah.
important. It's
Yeah.
important. And unfortunately, for most of us, we conflate money and what money is actually there for, which
Yeah.
is options and choices and the lifestyle, living the lifestyle that we most want to live.
Yeah.
Candidly, Eric, where the freedoms came from was I was at a conference years ago and I was sitting next to this guy who was in a rumpled button-down shirt and kind of jeans that looked like he pulled out of the hamper.
Mhm.
And he was ordering every single book that people mentioned from stage. And within the first couple of hours, he had probably ordered 25 or 30 books. And I'm sitting there like, who is this guy? And how does he have the time to read these if he's even
Yeah.
reading them? And the facilitator of the group said, I'd like people to stand up and give a credibility statement. And so this guy raised his hand and I thought, oh, this ought to be good. What's he going to say? And he stood up and he said, my name is Matt. I'm from Phoenix, Arizona. And I sold my first software company for $14 million. And then he sat down and I leaned over and I said, hey man, can I buy you lunch? I want to know, I want to know everything. And so we go to lunch and he said, what do you want to know? And I said, where did the money come from? How did this work? And he said, let me go deeper than that. The money itself is great to have, but what the money gives me is time, because those who
Yeah.
have money have time.
Yeah.
And the time means I get to build great relationships, and the relationships allow me to be of service to people in my life.
Yeah.
So really, these are the legacies we have to leave:
Yeah.
financial freedom, time freedom, money freedom, time freedom, relationship freedom, and service
Yeah.
freedom.
Yeah. And for me too, the other important factor is also legacy. So it's passing
Legacy.
on that freedom to my children.
Indeed.
So that's it doesn't make sense for my children to start from ground zero and from
Right.
their children to start from ground zero. I think they should be kind of like stepping over my dead body to rise up higher.
Right. Right.
Not necessarily dead. They don't have to wait for that time, but I think it's very important to kind of raise them up and then bring them up so that as a family, you can achieve higher heights.
I could not agree more. I think that it is a major disservice for parents not to teach their kids financial literacy early.
Yeah.
I mean, what are we doing with them if not raising them to be good stewards of their life, their resources, their time, etc.?
But to to defend them, most people don't know about financial
Yeah.
literacy in the first
Yeah.
place. So,
True.
so where do they get that kind of information? I know for a fact you're not getting that from the education system. I mean, you're getting some information that's going to be useful when you're
Yes.
going to work for the big man.
Yeah.
But other than that, where do you get that information? Where do you get like credible financial literacy information?
Yeah, that's a great question. Obviously, podcasts like yours and groups, communities, I think people need to have a hunger to go find it.
Yeah.
And unfortunately, I think you're right. The majority of folks out there, if they grow up in a house where money is a taboo subject,
Yes.
we don't talk about it for various reasons because it caused conflict,
Yeah.
early in their life or whatever it may be. I think people have to really generate the hunger.
Yeah.
And I candidly, one of the things for me years and years ago was I interacted with someone who said, "Hey, you seem to have a good head on your shoulders. Go read Rich Dad Poor Dad.
Hmm.
Go read the Cash Flow Quadrant. Go read The Wealthy Barber, Think and Grow Rich, The Richest Man in Babylon." And he just went down this list,
Yeah. Yeah.
and he became
Is
one of
that
my
the same
first.
man that was buying all the books at the back of the
It would be seem the same, wouldn't it? It was not him, surprisingly, but that'd be a good twist to my story. He told me all these books I should read.
Hey,
Yeah.
it happened to be the same guy. So tell us about so you paid off your home in record time. So
Yeah.
how did you do that? I mean, a house is often more a burden. I know that Rich Dad Poor Dad, Kiyosaki calls
Yeah.
a home a
A
liability.
liability.
And I know that a lot of the wealthy people, I mean, they don't even own their home; they rent their home
Yeah.
because they see it as a liability. Exactly. So
Yep.
tell us about how you about your home and how you were able to accelerate the payment and save so much interest.
Yes. In well, first of all, it's probably safe to throw out there that I was in the mortgage business for a number of years. And the way we made our money was in refinances and some
Yeah.
purchase money business. But in a refinance, what I kept noticing was every time someone would come in to refinance, we would reset the clock to zero,
Yeah.
right? They'd been in it 2 years, 24 months in, they'd made all their payments. We were going to tack on another 2,500 to $5,000 in fees. And then maybe we'd save them, whatever it was, 75 to $200 a month in
Mhm.
payment, right? If the rate was going down.
Yeah.
But what kept getting me was we're resetting the clock to zero.
Yeah.
And when we do that, the compound interest clock just starts all over again, right? Or the amortization table. And so I started digging into, is there a way to game the amortization table? Can
Mhm.
you play games with that? Can you use the bank's logic against the bank? And was introduced to a piece of software which ended up becoming the Shred method. And essentially what we do, Eric, is, or what we did, my wife and I did, was we realized that all of the savings accounts and the investment funds and all these things that we were dollar cost averaging into
Yeah.
was largely inefficient
Hmm.
because we still had these massive debts that we were paying off in the way of student loans and mortgages and so on and so forth. And so in 2012, I got really serious about using the Shred method software. And for 3 years, we were diligent about making the payments as the system suggested we do.
Yeah.
And in that amount of time, we took about a $260,000 mortgage down to $40,000.
Wow.
And at that point in time, I started doing the math like, well, I have a home equity line of credit. I'll just pay off the mortgage with the HELOC
Hmm.
and have a much smaller payment.
Yeah.
And at the time, what happened was, we live in a now finished 5,200 square foot home. And in 2015, when I paid off the mortgage with the HELOC, our interest only payment on that HELOC was around $230 a month.
Oh, really?
So I'm living in this beautiful home for $230 a month,
Yeah.
and I have control of about $150,000 in equity because
Mhm.
I have a line of credit that's
Yeah.
200 grand, right? And I realized at that moment that what I have here is something that many, many people need to understand. Maybe not to be completely out of debt, but at the very least to efficiently control their cash flow well.
Yeah. Yeah. So what about, is HELOC a good time right now to do the HELOC? I mean, I would be a little bit concerned right now to do a HELOC because most of them are adjustable.
They are.
Most of them are callable,
Yeah.
which means that at any point in time, the bank can give you a call. That's why it's callable. And they say,
Yes.
you know what, your line of credit, we need you to either pay it off or, you need to convert it to a loan if
Yes.
you qualify.
Yes.
This is something that happened in 2008. A lot of the
Yeah.
lines of credits and HELOCs were actually frozen, and some of them were caught like doing
Yeah.
that. So, and maybe it doesn't apply only to HELOC. Maybe there's another financial loan that you can get that to help you accelerate.
Yeah.
But so, what do you think about HELOC right now? Is this still a good idea?
This is a really good question. Eric, and I was in the mortgage business when all those HELOCs were being called.
Mhm.
And candidly, where they were being called more often than not was on the coast. They were being called in California and Florida and, sun states or beach states. And I think what was happening was the home prices depreciated so quickly, and people were using their HELOCs as a purchasing tool. They
Oh,
weren't they
yeah.
weren't using it as an investment vehicle. So the banks had to. They were out over their skis in terms of loan to value on these properties, right?
Yeah. Yeah.
Today, I would agree that the HELOC is it's a little bit different animal because of the interest rate environment we're in.
Mhm.
So we're seeing HELOCs come in at somewhere between 4.5 to 5 to 7.5, depending on the lender.
Yeah.
And to be quite candid, it still works. The shred
Yeah.
method still works, even with rates that high.
Mhm.
However, one of the things that we're also teaching people is if you have a fairly decent size emergency fund,
Yeah.
we can peel away 10 or $15,000 of that and
Yeah.
use that as a shred fund that
Yeah.
does the exact same thing that the tool would use a HELOC for.
Yeah, yeah. So I think that's right. And there might be other forms. I mean, you can get interest only loans out there. So you maybe
Yes.
could get a loan that is a second lien position on your house and use that. But at least it would be fixed interest rate and it would be
Yes,
not callable.
absolutely.
So that you can still use the same method at that point.
Indeed. And the interesting way that we describe this sometimes is the line of credit or the bank of money, the account of money that you're using for this is
Mhm.
simply the operator account.
Yeah,
And the operator account takes all income, it pays all expenses, it even pays your income.
yeah,
But it's merely a pass through.
yeah.
And the software through a complex algorithm is just showing you based on what you have coming in, what you have going out, and the amortization tables or compound interest tables behind it.
Yeah.
It's going to tell you what to do to make that income more efficient.
Yeah, yeah, yeah. So the other thing too, in California, I mean, that was, I don't know if it was true also on the East Coast, but in California, people were literally living by refinancing their homes and
Yes.
getting HELOCs
Yes.
because a lot of them they couldn't even
They
afford
couldn't
a house,
afford. That's right.
and then they say, okay, well, this is like, okay, well, I'm going to do some renovations, or I'm going to do this, or I'm going to need more money, and then they
Yes.
increase their HELOC. Then their HELOC would be maxed out, and they say, okay, well, I'm going to refi, and then because the value of the property increased, but then that increased their payment, increased their interest payment, of course,
Yes.
because as you mentioned, I mean, it resets the clock, and now
Yep.
most of your mortgage payment is going towards interest instead of going towards the principal.
That's
And
right.
it's like, and then their situation was worse than it was before, and now they they did the same game again, and it was just like
Yes.
people were refinancing like so much. I came from Canada in 2000,
Yeah.
and then I started working with people here, and I was absolutely amazed by the number of refinance. People would refinance at once a year, sometimes twice a
Yes.
year, because their house was appreciating, and they say, "Oh, I can get some money out," and they wouldn't even invest that money for something else. Like it's one
It,
thing if you refi to invest in something and then you kind of pay yourself back, but it was just
yes.
to buy, a boat or something like that.
it,
Or
it was it was as if it would go on forever. I think
yeah,
that's how many people were operating.
yeah.
And I'll see some of your experiences and raise you. We had one mortgage broker who was refinancing his $700,000 home every 4 months.
4 months. My
And so what he would do is he would refi his own property. He would charge enough money in yield spread premium so that he would make 2 or 3 points on the back end. So he would get a $21,000 check from the mortgage company that he just refinanced to, make one
wow.
payment, and then
Yeah.
he'd refi it again.
Well, that's
And
excited.
oh my goodness, when I found out what he was doing, I was like, how is this even? How are they not calling him on it? How is it
Yeah,
legal?
yeah, yeah, yeah.
It was just the Wild West at the
Yeah,
time.
yeah. Oh, this is great. So tell us a little bit about infinite banking and how that would work with because some of the things that you're saying,
Yeah.
saying, some of these things they sound a lot like infinite banking, kind of how
Yeah.
you would use that. So tell us a little bit more how that infinite banking concept would fit
Yeah.
into Shred.
Yeah. So what I do, Eric, and what I realized once we had paid off the house the first time and we refinanced $200,000 out of the property that we, almost owned free and
Yeah.
clear. And we deployed that. So we put that $200,000 into a syndication.
Okay.
And the syndication was churning, I don't know, roughly about $800 a month in income.
Yeah.
And then there was a back end payout after about 3 or 4 years.
Yeah.
So my thought was, well, if I can get enough passive income in from the money I just deployed that covers my mortgage payment,
Yeah.
then I'm pretty much living for free.
Yeah.
And at that time, we were still in the mode of shredding. So we went after the new $240,000 loan
Yeah.
and shredded that close to
Yeah.
zero in about the same 2.5 to 3 year period. And in the midst of that, what I realized, Eric, was what we wanted was a bank of money, almost like a bucket. And our
Yeah.
goal, the way I envision it is, we're filling up buckets of money in order to dump those buckets of money into investments.
Yeah.
And I started doing a lot of reading and researching on infinite banking. Know that some of the wealthiest families in the world use that as a vehicle for investment
Yeah.
or passing wealth down to future generations. And so we dug in and we overfunded a cash value life insurance policy.
Ah,
And this is the kicker.
that is funny because that's what I was about to suggest. I thought, hey, we could use like a universal life insurance.
Yes.
Okay. Yeah. Yeah.
Yes.
Go ahead though.
So we overfunded a policy in my name
Yeah. Yeah.
for 4 years at $25,000 a year on the premium.
Yeah.
And essentially what we had was over the course of 3.5 or 4 years, about $110,000. I rolled an old policy in,
Yeah.
had $110,000 in cash in that policy,
Yeah.
and then said, okay, well, here's a bucket. Let's go dump that bucket somewhere and make more money.
Yeah.
And the key to the overfunding universal life or whole life policies, from my perspective, is people will be sold these policies by an agent, but most of the time it comes with a really hefty monthly bill, a premium on a monthly basis that you have to foot. And the challenge with that is you add a $2,000 monthly bill, it starts to feel oppressive. You're like, geez, I got to draw another $2,000 check.
Yeah.
Yet when you write a $25,000 check out of your HELOC,
Yeah.
it's automatically earning compound interest, right?
Yeah.
It's already compounding on itself. The next year it comes real easy. We just write another one out of the HELOC.
Yeah.
And because our income is continually cycled through that throughout the year, the
Mhm.
25 grand is shredded down to zero in
Yeah.
months' time.
Yeah.
So we realized that we just had a really effective mechanism going
Yeah.
to empty and refill buckets. And
Yeah.
at some point you realize I got to have more buckets to fill because there's going to be more spigots that are turned on at some point.
But these are good spigot. It's not like you're leaking, the boat is leaking from all. These are good spigot that are bringing in cash flow
Yes.
into your system. So that's very good.
Yes.
And I think so. I mean, this is a little bit. I mean, this is genius. This is like, but it's not. I mean, it's not common sense. It's not like, and normally you'd be like, oh, I need more money. Well, I'm gonna get a second job.
Yeah.
Now this is like, okay, now I'm thinking like the rich. I'm thinking like a wealth generator, and just by applying these concepts and stuff like that, you're able to make money, make passive income without having to get another job and then go out there and so that, I mean, that's phenomenal.
It's been, thank you for saying so. I tend to think it's pretty smart. It took my wife a while to realize how smart I was, but
well, if your wife realizes you're smart, I mean, you've achieved we achieve everything that a man could expect.
Check the box. What I tend to call this, Eric, is the 10-year freedom plan, because I really believe that in 10 years time, virtually anyone, now it's somewhat dependent on your habits and your spending proclivities and all of that, but virtually anyone could be financially free in 10 years if all they do is they follow these super simple steps. Shred for somewhere between 1 and 3 years, infinite banking for 1 to 4 years, and invest in multiple streams of massive passive permanent income. And that's why I love your business model. These are homes. They can, if I want to empty a bucket, I just go on to Martel Turnkey. I'm like, well, which house would be a good investment here that
Yeah.
could generate, turn on another spigot, right?
Yeah, exactly. And yeah, you just get one. I mean, you get the loan, the mortgage on it, and then you just shred it over a few years, and
Yep.
that would, like, really accelerate your portfolio.
Absolutely.
Right now, without even using your shred method, I mean,
Yeah.
someone could, if they save quite a bit, I mean, they would be, they would be able to achieve like financial freedom based on, some reasonable number,
Yeah.
within 10 years. But now I'm wondering, like, if somebody is using turnkey rentals, on top of that, they're using shred method. So maybe
Yeah.
instead of waiting 10 years, they would be able to bring it down to 7 years or 5 years,
question.
right?
No question.
So
Yeah. And it all depends on how they're using the leverage,
yeah,
because if they're doing it intelligently where they're not over leveraged, they're not super risky, it's all very calculated risk and they know that the cash flow is there.
yeah,
This thing becomes like a video game you can't lose.
yeah,
It's
yeah.
just how much time are you going to take to make it happen and have the consistency of it?
Yeah, and a lot of people, they don't need the cash flow at the beginning. They're still working, they're saving, they just want to buy
Yeah.
one house at a time. If you
Yep.
don't need the cash flow, just dump it on the mortgage, or if you have a HELOC, or do some other method, but really kind of like pay it down as quickly as you can, and then re-leverage, and then go get the next one. Now you
Yes.
have two buckets to fill now.
That's
And
exactly right.
so yeah. So that's very good. Now let's talk about the FIRE movement.
Yes.
So this has been around for a while. I mean, I used to hear it quite a bit, which is financial independence. I forget what the acronym stands
Yeah.
for.
Retire early.
Retire early. That's right. So and then so it used to be very popular. I used to hear it quite a bit, maybe like 5 or maybe even older than that, 5 or 6 years ago. And now I'm not hearing it so much.
Yeah.
So tell us more about that, and kind of like your involvement with that, and how can people know more about it?
Well, and what's funny about this, Eric, and I love the question about the FIRE movement, because I think I was maybe an early adopter of the FIRE movement before it was even a thing. And then Mr. Money Mustache really started, documenting his journey, and he's got a lot of mustachians who are super frugal and
Yeah,
put 10 people to a room at a conference and that kind of thing, which it's not necessarily my version of FIRE.
yeah.
For me, very
It wouldn't
candidly,
be my version either.
yeah, I like a nice bottle of wine. I like a good dinner. I love to travel, and when I travel, I tend to travel really well. But FIRE for me was more about well, there was one key strategy to FIRE from my perspective, and that was, how do you minimize
Mhm.
your monthly liabilities, but
Yeah,
maximize the time that you're spending, the money that you're making in the time that you're spending.
yeah,
So there's kind of a unique algorithm or equation in this for me, and it was this. I kept asking myself, how do I make as much money in an hour as most people make in a month?
hmm,
And as well as anybody, that if you ask a question, your subconscious mind just keeps spinning on that question until
yeah,
it answers it.
yeah,
And the answer that I kept getting was, you need to continue on the professional speaking circuit. Like, just
mhm,
keep getting better and better and better,
yeah,
because you get to a point where an hour of my time might be worth somewhere between $5,000 and $15,000.
yeah,
Now,
yeah,
it may take a day or a day and a half to get to wherever I'm going, but usually I'm in Orlando or San Diego or Las Vegas or somewhere fun, right?
yeah.
Um, on occasion, I'll be in like nowhere, North Dakota or Ohio or somewhere, but that's okay too.
Green.
But I started digging more into, how do I make more money in an hour than most people make in a month?
Yeah,
And then, how do we minimize our monthly expenses?
yeah,
So I really need to do one gig in order to cover whatever our monthly nut is at home.
yeah. Wow.
And we got to that point really quick because we have no car payments, we have no student loan payments, no credit cards. Our mortgage is paid for through passive income.
Hmm.
My kids do have this nasty habit of eating 3 times a day, sometimes 4. I don't think I can stop that. But we have learned how to build a life that really works for us
Yeah,
on a limited, fixed amount every month.
yeah. Yeah, I mean, that's a return on time, basically, kind of like maximize your return on time.
Totally.
And that's true. So that's kind of goes well and well. It goes kind of hand in hand with financial freedom or time freedom. Is that
Yes.
yeah, you want to get your time back, and then once you get that, I mean, you I guess you value it or you appreciate it more, and you're not willing to just like give it away or stuff like
That's
that. It's
right.
if you want to get on my schedule, you're gonna we want to make sure that it's productive, that it's going to be valuable and all that kind of stuff. And that, and
Yeah,
that,
it definitely changed it changed the way that I looked at taking appointments, because if it filled my bucket, if it helped me fulfill values of mine, I
yeah,
was all for it.
yeah,
If it was something that, clearly was a pitch or didn't support what I was trying to create in terms of family time or what have you,
mhm,
then I would turn it down. And I think just having a different perspective about that changes how you orient your calendar and your priorities and all of the above.
yeah. And so the fire movement is it dead now, or is it like is still out there, and there's still you can still find information about
Oh
that?
yeah, it's alive and well.
Okay.
There are plenty of people out there who are creating, and now there are different versions of it. There's lean fire, there's fat fire, there's
Yeah, that's it. That's it.
barista
Yeah, yeah.
fire.
I knew there was different level at one point because I was talking to someone else, and it was just like, okay, well, I don't want like the fire movement because I don't want to be frugal. I want to live my life. I want to enjoy
Yeah,
it. I mean, if I can't do that, then what's the point? You know,
right,
I'm not going to
right.
the van life, as we mentioned. But so I want to live my life. I want to enjoy everything. Uh,
Yeah,
so if I can't do that, that doesn't work. But yeah, I heard about the lean fire and the fat fire you mentioned and stuff like
yep,
that. So these are
yep.
more realistic. But how does the fire principle still apply, or how are they change when you want to apply like fat fire versus like the lean fire? How
Yeah.
does that change?
I'll give you a couple of examples, and maybe they're not the fat and lean fire, but two that I like are barista fire,
Yeah,
which is essentially getting to a point on your expenses that you could work 50% time at Starbucks and make enough money to cover all your bills and have health care,
yeah,
and you're golden, right? Like do whatever you want. Now, some people might dip into barista fire for a period of time
yeah,
and then realize what they really want to do is whatever their side hustle is, and they start making money on the side hustle, and that becomes their thing.
yeah,
So that's an interesting one. One that a number of my friends will talk about is coast fire,
yeah,
which is at some point in time you'll have invested enough money that the rule of 72 would suggest that you're going to have plenty of money into retirement.
yeah,
So you could never invest another dime and you'll be fine in retirement.
yeah,
And so you just work because you want to work, not because you have to. And
yeah.
you can choose what hours you do and that kind of thing.
Mhm.
So there's lots of different elements of this. One thing I will say is that when you look at the acronym financially independent, retire early, the retire early always throws some people off, because I would assume a person like yourself or me for sure, I don't know that I'll ever retire. I'll always do
Yeah,
things,
yeah.
and
People give
have
me a hard
business.
time. People give me a
Yeah.
hard time because I'm working, I'm doing this, I'm talking to amazing people, and I say, that's because I thought you were retiring and I thought you were financially free, but here you are working and stuff like that. But that's because I enjoy it. It's not
That's
because,
right.
like
Yeah.
it's kind of strange. People are, oh no, you have to go and play golf,
Right. Right. Yeah. What does that look like exactly?
Exactly.
I heard someone say she was going after FINE, financially independent next endeavor,
Oh,
which
nice.
I thought that was cool.
That is very nice. Yeah.
Because I don't know that I'll ever go after the part. I think I'll write more books. I may do more
Yeah.
documentaries or try and sell a screenplay. I'm going to do something that
Yeah.
fires me up, gets me excited, is creative. Right now, obviously, the Shred Method is my project,
Yeah.
and we're working. My big goal, Eric, is to have 1 million users, subscribers of Shred,
Yeah.
and to help free themselves to be themselves.
Yeah.
Meaning, hey, get to a point where let's don't just shred your mortgage or shred your debt. Let's shred your life to
Yeah.
a point where you get to control everything.
Hmm.
Yeah,
So how do people participate in that shred movement?
yeah. So if you go to the shredmethod.com,
Yeah.
what we have put there is there's a number of tools and resources that people can download. We have a HELOC guide that shows you what to go look for and ask for at your local bank or credit union. We have a savings calculator that will spit out how quickly could you be out of debt given your income and expenses and mortgage and all of that. And then the course really is what people sign up for, Eric. So the course teaches you everything, the what, how, what, why, and how of the shred method that would allow someone to get started on day one. And then we have the software product that's a monthly subscription. And I described the software product as a behavior modification tool.
Okay.
So our goal is to get people just trained in what to do with their money, because we're trained to do what the banker tells us to do right now.
Yeah, or not trained at all. We just
We're not trained at all. Exactly.
Oh, so that sounds very good. I mean, definitely a lot of, and then you have a bunch of other books as well that are, that are available. I'm assuming on Amazon. Where
They
else?
are. Yep. All on Amazon. Yep. The best delivery tool known to man.
So, where else can people reach out to you if they are interested in the shred method or any of your other books? Or obviously you're on TEDx. On what was that called? The TEDx.
It was the London Business School is where we did the TED event.
Oh, okay.
And so it's available on TED.com and on YouTube.
Okay.
And we're up to, I think, 6.2 million views or something like that at this point.
Amazing.
So it's been, radically popular and shared a ton of times and on playlists and all of that.
Yeah.
But if people want to find more about me, adamcarroll.info. That's 2 R's, 2 L's, adamcarroll.info. Or if you go to theshredmethod.com, that's where the calculator, the downloads, the courses, that we've got articles in there, all that stuff's available at the Shred Method.
Oh, that's great. That's very good. The other thing I wanted to say, are you on social media like Instagram? And
I am. Yeah. Instagram, adam.carroll and the.shredmethod.
Okay.
2 sites. Yeah.
So, TikTok. Are you on TikTok?
You know what's funny, Eric? I've been like wanting to dip my toe in the TikTok water, and I just haven't done it yet. But do tell. Is this a good?
No, it is just amazing. I mean, if you want to grow, access a group of people and stuff like that, it really helps expand your boundaries, your normal network of people. So it's pretty good. It really spreads your message to a bigger group. Instagram is kind of like, it's a little bit slower to. I mean, you're at another level on Instagram, but and when you get started on Instagram, it's kind of slow, and then until someone gets, then you grow fast. But it's, you have to be consistent and disciplined and continue to to publish.
I will start following you on TikTok.
Yeah, I highly recommend it on TikTok.
Love that. Love that.
Well, Adam, thank you very much. Anything else you want to add? Did you want to recommend to our listeners?
Well, I'll tell you what, the business that you run, Martel Turnkey, is, from my perspective, a brilliant model for someone that wants to shred, but then leverage that equity into something. And I know a lot of people who are very cautious, fearful about getting into rentals. But everything I'm seeing of your properties online, they're so well done. They're rent ready. They're rented. I mean, this is the most, to use your word, turnkey kind of business that I've seen. So I'm just super impressed with that. And I think the two of those hand in hand can really create that financial freedom people are looking for.
Yeah. So Adam, I think we can talk about something. Like, I could actually, if you have students and people that are interested, pass them on to me, and I'll give them like $1,000 off a house. Any house.
Oh, that would be amazing. Yeah. So, let's definitely connect on that.
Absolutely. All right. Well, Adam, thank you very much. And this was not rehearsed, by the way. We just like think about that just now. So so thank you very much. We appreciate it.
Thank you, Eric.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.